Hey everyone, my name is Wasim Ahmad. I'm one of the co-founders of Vault 12, which helps retail investors do cryptocurrency inheritance, something that everyone needs to think about because no one's gonna do it for you. And then joining me on the panel today is Tarek Mansour from Kalshi, Andrew McCormick from eToro, and Congressman Shri Thanedar from Michigan.
Yeah.
Wonderful. Great. Okay, so we're going to jump into it straight away. So my first question is for Andrew and Tarek, really to kind of define for us the conversation around retail investors. So who have they been, and how is that evolving? Do you want to take it away?
Yeah, I'd love to jump in. Thanks for everyone for being here. So I think we've seen some incredible and really cool trends in the last couple of years. Like historically, the stereotypes is investing is for older rich people, and that's it. In the last couple of years, we're seeing all those barriers fall down. In the US, in traditional markets, we've seen 50% of Americans typically own stocks. That's now more like 60, 65%. Crypto assets and percentage of Americans holding crypto assets in the last 2 or 3 years has doubled. And I think what's like especially cool is there's more people investing, but also at a younger age. And at eToro, we are a retail trading platform serving millions of customers around the world. And a majority of our users are millennials and younger, which we classify as young investors, which brings joy to my heart because I'm barely a millennial. So technically, I am still at age 42 a young investor. And so what we see, more people are investing at younger ages, and it's having a very interesting impact because younger folks have a longer time horizon, so they can take more risk. Stereotypically, that's like the YOLO trades people talk about in the news, meme stocks, meme coins, but it goes beyond that. We've seen ETF assets more than double in the last 5 years, and I think it's cool because if you're a young investor and you're starting at 20 instead of 45, you can take more risk, you have a longer time horizon. I think that's like really, really healthy and really exciting, and what seems relevant to your world, an amazing trend we're gonna see in 20 years is we're just $80+ trillion are going to pass from older generations to millennials and younger by 2050.
And 7 trillion of that is going to be in crypto assets.
That's a great commercial for you. And what's amazing, most of those assets today are probably in advisory accounts where people go into an office, they meet with a financial advisor once or twice a year. And younger investors, I don't think that's our jam. That's not what people are going to do in the future. And so mobile trading apps where people are doing these trades on their phone, I think going to be a recipient for a lot of these types of assets. And maybe that's crypto, maybe that's meme stocks, maybe that's really cool binary futures platforms where, today older folks aren't really down with it, but in the future it's going to be the norm. So more people investing and younger, and I think that's a powerful force.
So Tarek, you started your company at the age of 22. So are your retail customers older or younger?
We have the full spectrum. It's definitely concentrated. It goes sort of like, it's a curve that just goes down as the age goes up. But maybe just a little bit of context on how we started the company. So what we do, we're Kalshi. We're a prediction market in the US, the leading one. If you didn't hear the name of the company, you probably heard that we were forecasting Trump winning the election, leading up to the election. What we do is we list derivatives. We're regulated by the CFTC, and these derivatives are yes or no question about anything that could happen in the future. Who's going to win an election? Will it rain tomorrow? What is the Fed going to do at the next meeting? And is a hurricane going to hit a certain city? The thing that's very important, so I actually started the company after spending some time at Goldman and Citadel. And the key insight that we saw when I was there, and the clients were not retail clients; they were institutional clients actually. They were asking very simple questions about the future. It's like, hey, we want to hedge against Brexit or to get exposure to Brexit. That was actually 80% of the flow we used to get at the desk at Goldman. And what we would do is we would use traditional assets to give them that exposure they were looking for. But there were a few problems. Like one, it was a proxy. So a lot of people actually put on a S&P short ahead of the 2016 Trump election because they thought that was a Trump hedge. Trump did indeed win, so they were right, but they lost money because the S&P went up. And then number two is kind of opaque. It was OTC, the banks would decide the price, and there wasn't sort of a dynamic, transparent marketplace for these things. And so that's the approach, that's where we came from to build this marketplace. So going back to the question about retail, what we see with Kalshi, so we spent years getting regulated. We've grown a lot now. We have millions of customers. And these customers are actually, generally speaking, people that have traditionally not been in financial markets. Our average customer, if you ask them, do you trade in options and derivatives? Their usual answer is actually no, because I don't gamble. And the reason they answer that way is because what we've built is we've built a tool, a financial instrument that a much vaster and wider range of people relate to. A lot of people may relate to things around culture and what's going on there, or the weather. Most people relate with the weather because they can see if it's raining or sunny, or politics, which a lot of people, I don't need to tell you about how much people relate with politics, and a variety of other things, but they didn't really have a mechanism to actually express opinions on these types of topics that they relate to or have views on or hedge risk with respect to these things. And it's so interesting because if you're a person that's worried about Brexit and how it's going to impact your business, you actually understand that very, very well and intricately. You may not understand a lot of the traditional assets. So we see kind of this rising class of people that are entering like financial markets, but really through prediction markets, through Kalshi. And and it's this sort of idea of, I like the kind of the analogy where sort of like at the time Uber was like, the pitch to a lot of drivers was like, you have extra time, how about you monetize it? And this rising class of people and it's really beautiful, like you read the news a lot, you know a lot about the economy, you have a lot of views, you go to trivia night and argue with your friends on Twitter, you have a lot of knowledge, how about you monetize it? And that's really sort of what we're seeing, at least on our end. And I find that very, very exciting because the playing field now is pretty level. Citadel is not actually the dominant force in our types of markets. It's retail.
Great. So, Congressman, I want to turn to you. You represent a district in Michigan. You were the only Democratic co-sponsor of a bill that focused on removing the IRS from being able to kind of mess around with CeFi and DeFi corporations. What is your vision for how crypto can help retail investors?
Well, look, thank you for having me on the panel, Wasim. My name is Shri Thanedar. I represent Michigan's 13th Congressional District. And, I was proud to vote for the FIT 21 and as well as Resolution 25. Again, making it easier. In my district now, district is one of the fifth poorest district in the country. And I'm starting to see Bitcoin ATMs popping up, especially in the low-income areas, something that is charging 20% premium on purchasing Bitcoin. So from that, how do we go to a position where crypto is in every wallet and people, not just the wealthy and accessible, but people at the low-income area, how would they start using this as their daily currency? How would my small mama-papa businesses would use this to do business across the world? And then how does Congress come in and make it easier? How do we make sure that the innovators and entrepreneurs aren't going to UAE and aren't going to Singapore and everywhere else, that we have meaningful guidelines that the innovators and the entrepreneurs feel comfortable setting up their shop in the US because they could go take their laptop and go anywhere they want to go. And how do we keep them here in the US? How do we make this, just make sure that crypto is in every wallet?
Great. So I'm going to delve into those questions a little later. So before we get there, though, I would like the panelists to talk about what are the biggest challenges facing retail investors today.
So there's certainly challenges, but I'm a lawyer by trade, so I'll give a disclosure at the beginning because lawyers love disclosures, that there is no better time in American history to be an investor than today. So typically you would need, to know a financial advisor. Just to place a trade, you need $20 to pay a commission. You'd have to buy a full share, and if you want to do that for G&E or something, you might need $300 to place a single trade. Today you can get started with $10. Whether it's a stock, ETF, crypto, and so there's no better time to be an investor than today. It's never been easier, At the same time, there's never been so many educational resources out there, so many platforms that are making cool, innovative, engaging products that help people build better lives for them and their families. Some challenges, though, with that is there's persistent news out there, right? So years ago, if there's a huge drop in the stock market, you read about it the next day in the newspaper, you go to work. Now you're getting alerts on your phone, your friends are talking about it, you see on TV, social media, emails. So it gets like, it's easy to freak out and get scared, and there's probably nothing worse as an investor to do is to panic, to make an emotional sell, emotional trade. And I think that's hard in today's market because there's just information everywhere, which is really great and empowering and breaks down barriers, but can cause an emotional drain on you, whether it's finance or politics or your sports team is not performing how you want. And you see it all the time. So I think that information overload is a challenge. So I think it's important as an investor to stay committed and don't freak out and just plan for the future one step at a time.
So eToro is like the Robin Hood of Europe. So and then you have a footprint now in the US that's growing. Really, what is it that you're delivering that addresses sort of the challenges of retail investors? Is it a smoother on-ramp into a variety of different financial products? Is that kind of your mission?
So one is diversity of products, right? We're not just crypto, we're not just stocks. We have crypto, stocks, ETFs. In the future, we'll probably have futures and investment accounts and advisory accounts. So the diversity of offering is number one. Number two, we're very passionate about education, right? So we have a whole content called the eToro Academy with hundreds, maybe thousands of articles, videos, in what we call snackable content. It's like not some long thesis that no one's ever going to read, like a 2-minute video on key topics, what's an ETF, what's day trading, things like that, where people can digest it in the way we digest news and information today. And then just trying to make it super easy to get started. No commission on stock trading. You can make investments for as little as $10, right? So my family, we're passionate about Chipotle. It's the one thing that like all our kids eat, right? And historically, you might need $500 to buy a share of Chipotle. Now, if you're passionate about Chipotle and you're like, you know what, I don't want to be just a customer there, I want to be an owner, $10. And you can start building that platform. And that innovative like $10 entry point is not something that most firms offer.
That's great. So Tarek, you have upwards of 2 million downloads, billions of dollars in the market, and then you have partnered with Robinhood and Webull, is that right?
Yeah, with more in the pipeline.
Right,
yeah.
right. So what are you seeing as either challenges or just things that retail investors are overcoming in the rush to jump on top of prediction markets?
Yeah, so I mean, I think we now have, I would say, one of the largest ecosystems in terms of retail presence in the U.S. I would say, I'll talk a little bit about the challenges because I do think it's an interesting question. I think of them as sort of two buckets. Like one of them is regulation, and the second one is, let's call it like short attention spans, which I think is a real problem in retail today. The thing with regulation, and I'm talking a bit more strictly about CFTC world, which is the world that we live in. I mean, historically, like retail has generally been a bit left off the conversation. Like they're kind of always lagging. Generally they're underestimated. And I think the world has woken up now to like, actually, retail can propel a stock to multi-trillion-dollar market caps these days. That's something that was totally not possible 10 years ago. It is today. And I think there is a lot of work to do on creating. And one example is in our world in CFTC, there's actually no real consensus definition of what a retail investor is. Like, when you're asking about retail, I was thinking, like, I actually don't really know what that is. Our general definition of it, it's a dude trading, but like, what is retail and how do you think about that? Like, because, there's sophisticated retail, there's, extremely informed flow, there's less informed flow, and how do you differentiate between these? And I think so that's one challenge. I think there's a lot of work to do, and I think it's been very encouraging over the, kind of in recent history, we're seeing a lot more willingness and discussion around retail in our world, in the CFTC world. The second thing is, I think the world is short. Like we talk a lot about retail, sort of short attention span with people, but we don't actually you're not seeing kind of changes that sort of fit that. But the reality is like people can't really read anymore. Like the average sort of 25-year-old cannot read a blog post. They just can't. Like they have to get something in 10 seconds, and if it's less than 10 seconds, they're gone. They're not. So, as we think about that, it's like you need to sort of restructure. I mean, the marketplace. You need to restructure education. You need to restructure the entire journey that a retail customer goes through when they experience any financial service, with that core principle in mind. Like, you cannot actually go force people to go read long blog posts or long terms and conditions and then tell them like, hey, it was there, you should have known. You have to kind of integrate that into your UX, and that's a lot of the work we do at Kalshi.
Great. So Congressman, you touched on this. So how do you see crypto helping the average, ordinary investor? You talked about it, you touched on it in your opening remarks, and I know Senator Cory Booker has talked about this, but it's not a general conversation that's out in the media or anywhere. So, having seen poverty and all of those kinds of things, where do you see crypto helping the average person, the everyday person?
Well, look, the small businesses, doing business across the world is so difficult through the current banking system, the long delays that are happening, the rejections of wires and transfer of money, the cost. It just, as opposed to through crypto, transactions can happen in a matter of seconds. And to having that access, no low cost or no cost access to be able to transact quickly, efficiently, without having to go through the bureaucracy of a bank or without having to go through the fee structure. I do a lot of business myself with India, and when it's sending small amounts of dollars to Indian vendor becomes so difficult because invariably they get caught into the banking structure, and I get almost half of my wires get rejected when I go through the bank. Whereas having that access to do business, it would mean a lot to have that access for a small business. It would mean a lot to have that access for person of low income transacting, whether it's, and the blockchain just takes this further with all kinds of opportunities outside of crypto that all need to be explored. And we in the United States need to be the leader of the world in this. And this is where most of the innovation must happen. Unfortunately, currently the crypto transaction, 90% of them are outside of the US. So that has to change. And that's something I want to look at it from the Congress's perspective. How can we change regulations? How can we change things to make it easier for people to do business?
So unlike a lot of Congress people, you are actually a business person, a scientist, and an entrepreneur prior to taking your place in Congress. So how are you working with your colleagues? Earlier today, there was a session with Representatives Sarah McBride, Don Davis, and Sam Liccardo, talking about how they were working with Congress. So I'd love to hear from you. What are you doing to further your vision?
Well, currently, as if you look at the voting, on the first FIT 21, only about 45 Democrats voted for it. The last resolution were about 72 Democrats. So a very small group of Democrats do support this at this time. I am a part of a congressional progressive caucus. And there's a lot of suspicion in the progressive caucus about crypto is looked at as a tool of the rich and the powerful. And however, the Progressive Caucus and members of Progressive Caucus who care about access to financial markets, access to transactions, financial empowerment for people at low means, this is really the tool that needs to. So it's going to take a long time to turn people around, but education is the key. Education of members of Congress. They need to really understand about the powerful technology this is and how this is going to help average, everyday Americans.
Great. Now let's hear from the other side. So both of you have platforms, you target investors, everyday investors. What do you need? How are you going to work with policymakers? What do you need the policymakers to do? How do you get better outcomes for your customers as far as working with people in Congress, people in the Senate, et cetera?
I'd say clarity is helpful. It's interesting. The United States, and with our platform, we offer stocks and ETFs and options, but also crypto assets. And what that means, we have over 100 different regulatory jurisdictions. 50 states all have different says on the security side, stocks, ETFs, as well as the SEC and FINRA. And on the crypto side, 50 different states have opinions on that, and all different standards and rules. And when you're trying to run and build a lean, innovative fintech, a startup that's trying to help empower customers, it's really, really hard when you have over 100 different regulatory regimes you have to navigate. And we have operations in over 75 different countries, so we always have this very interesting A/B test of like how things operate in other countries. And when we talk with our AML and compliance colleagues in the UK, for example, this all sounds crazy to them. They have one regulator, stocks, crypto.
I've been working with them. It's insane what they're not doing.
It's just much more efficient. And of course, there's Dubai and Singapore where they're breaking new ground. Everything is very clear and certain and welcoming. And I mean, this is the best place of capital markets in human history. And the money's here, the talent's here, the brilliance is here. We just need that regulatory clarity. Whether it's perfect, it doesn't need to be perfect legislation, perfect regulations, but just something that's progressing and it's just clear. I think it'd be helpful.
We're going to hear from Commissioner Peirce at 4 on the main stage, so hopefully we'll start to see some of that clarity. Tarek, what do you have to add?
I think we might be out of time.
No, we have 2 minutes.
Okay, I'll do 2 minutes then. I'll do it fast. It's pretty simple. I actually think my perspective is slightly different. So I think we're regulated by the CFTC, the Commodity Futures Trading Commission. Obviously, CFTC is becoming more and more famous and popular these days. That's pretty cool to be CFTC regulated because of crypto, which is awesome. I actually think the CFTC has structurally been a very the difficulty is always kind of how do you balance sort of innovation and bringing things onshore and having the U.S. Capital markets or derivatives markets thrive, and then making sure that you don't let things explode basically, and be diligent and due process. And I actually my perspective after kind of working with CFTC for I think close to 5 or 6 years now, I think that regulator has actually done a pretty good job at kind of towing that balance, and in some ways maybe it's one of those rare things, like we don't have much to complain. I mean, we have our disagreements with the CFTC, and this coming from a company that has sued that regulator 2 years ago. So, and sometimes we disagree on certain issues, and we on that specific issue we ended up winning. But on most issues, I think it's been a regulator that's been sort of very pro listening to kind of new entrants and innovation. And maybe the kind of TLDR here is just kind of this sort of bi-directional dialogue. That's I think pretty critical. It's like for companies to actually educate regulators and vice versa, for companies to listen to regulators, and so I think that's probably my perspective on this.
Great, thank you very much. I think we are now out of time. Thank you, panelists. Thank you so much for sharing your insights today.
Thanks, everyone.